5 a.m. in New York City. Good morning. I'm Bonnie Quinn in for Danny Berger with your Bloomberg Brief. Here's what you need to know. Tariff warning. President Trump plans to send letters to trading partners ahead of the July 9th deadline. Unilateral levies ahead. Mideast tensions. The Pentagon orders some staff to pull out of their embassy in Baghdad after Iran threatened to strike U.S. bases. And markets keeping a close eye on that 30-year auction as concerns mount over U.S. deficits and President Trump's tax bill. So let's take a look at futures and how we're shaping up for the trading day. Remember, we had 3 up sessions followed by a small down session yesterday, with the S&P finishing down about 0.25%. Futures pointed to another lower session today, although there are some catalysts in the early hours this morning that may improve as the day goes along. Nasdaq 100 futures down 0.4% after a 0.4% drop for that index yesterday. And Russell 2000 futures, the smaller and medium-sized businesses perhaps more affected by potential tariffs and so on, those futures pointed to a much lower open, down 0.7%. Let's take a look at bond futures because we are all eyes on that 30-year auction later on today. The 20-year yesterday came in pretty fine. That said, we're a little richer today on the 30-year. That yield down to 4.89. That's almost a full 10 basis points lower than where it was just a week or two ago, although still 10 basis points higher than the beginning of the year. Look at that, the 2-year yield down to 3.93 and the 10-year yield at 4.40 after a well-received auction. By the way, sell the dollar continues. That is the theme. Well, let's get some stocks to watch now in the early hours. Here's Joe Easton.
Morning, Vonnie. So we have seen a drop down in Boeing shares recently following this troubling news of a plane crash. A plane that was coming from India to London has crashed, according to latest reporting, and we do understand that it was a Boeing jet. So we've seen that stock dropping on what does sound like pretty tragic news, but we have seen a drop down in Boeing, so just thought we'd bring that one to you. Then in terms of the big earnings moves, we have got a move to the upside in Oracle today. The company smashing its earnings forecast last night. A lot of this tied to the AI growth and AI machinery, so we're seeing that stock gaining the forecast much better than analysts were expecting. So ORCL up 7.5% this morning. Then we've got CoreWeave. This one potentially going to be stinging some short sellers today. The company, which is also tied to AI, recently IPO'd and was targeted by short sellers, but actually it's got a new involvement in a pact between Google and OpenAI, and that is lifting the stock today. As I say, probably going to see a bit of a short squeeze on that one. And as usual, keep an eye on the terminal for the before the bell opening wrap, which will wrap up all of this news and more before the open of trading. Vonnie.
Joe, thank you so much. Keeping an eye on all those stocks today. And coming up this hour, we're going to be speaking with Wu Silverman of RBC Capital Markets on the biggest risks to volatility and what lies ahead. But first, let's get back to our headline story. President Donald Trump planning to set the agenda for trading partners. He wants to send letters to them in the next 1 to 2 weeks. Joining us now is Bloomberg's Brendan Murray. Brendan, this is all ahead of the July 9th deadline. So what are we anticipating these letters will look like? Separate letters for every nation that we're negotiating with? And does that include places like Japan and Korea, South Korea as well?
Yeah, exactly. So it looks like we're getting 2 messages from the White House. One from the president, that seems to be targeted toward countries that think that they can stall for time, that they'll automatically get a postponement of the 10% tariff that's set to spring higher on July 9th. And we're hearing Treasury Secretary Bessent say, you know, if you're negotiating with us in good faith, then we'll roll that out for you, and you won't have to face that higher reciprocal tariff. So we're coming down to crunch time now for these trade negotiations. There's just 3 weeks or so to go, and it sounds like the White House is trying to get the ones that are moving the fastest over the finish line and encourage the countries that are dragging their feet to speed up or else face those higher tariffs.
And you have to wonder if it's going to be the worst case scenario again in these letters like it was the last time, or if we should expect something different. Is the EU exempt from this letter, given that we know talks are apparently going to continue maybe even beyond July 9th?
So the EU, according to our reporting recently, thinks that it's going to get some sort of agreement in principle to continue talks further out in the future past that July 9th deadline, and in a way that doesn't raise their tariff to the 50% that President Trump has threatened. Now, Commerce Secretary Howard Lutnick said the EU is at the back of the line. So the EU is apparently one of those countries that the U.S. wants them to improve the offer that they're pulling together, and in order to reach a deal on time. So there's an interesting push and pull going on between the Washington and Brussels right now. The Brussels thinks it can get a postponement, some sort of temporary deal, and the U.S. is saying, well, you're actually not as far along as you think you are.
And if we move to the other theatre of this, that's China. And of course, we've had 2 days of talks and an agreement and so on. More chatter out of China today to the effect that, yes, it has started issuing rare earths licenses. How are relations? Are they less frosty?
Yeah, it sounds like there's been a modest de-escalation of the tensions between the U.S. and China. The U.S. came back, and President Trump posted on social media that this was a deal, that it was done, that it was going to help American importers that need China's rare earth minerals. And China seemed to validate that. Some export licenses have been approved over the past 24 or 48 hours. So the U.S. is going to be very carefully monitoring compliance with the Geneva deal that both sides decided to reconfirm this week in London. So it's a fairly fragile truce, however. So we'll have to wait and see if China complies and the U.S. can verify that, whether this relative calm in the relationship can last more than a week or more. They have a couple more months yet before the deadline to reach some sort of agreement. So it's playing out in a way that at any moment it could escalate or even de-escalate.
All right, Brendan, watching every moment for us. Much appreciated. That is Bloomberg's Brendan Murray. Over in the Middle East, tensions are rising, and the U.S. has ordered some staff to leave its embassy in Baghdad after Iran threatened to strike American air bases in the region if talks over its nuclear program fell through. Joining us now from Istanbul is Bloomberg's Patrick Sykes. Patrick, this seems to be escalating, at least partially, quite quickly. From Noor, the semi-official Iranian agency, this morning, we're hearing that the Iranian government has ordered the launch of a new uranium enrichment center. That doesn't sound so good. And now we're also getting the US State Department telling government employees within Israel not to travel, basically. Is this escalating like it seems to be?
It's definitely escalating today. That move by the Iranians, the announcement that they're going to launch another uranium enrichment facility, was in response to Iran being censured by the UN's nuclear watchdog. Iran had promised to respond in kind in some way, but we didn't know exactly how it would do so. That's definitely going to only increase concerns about the way that Iran's nuclear program is enriching. And the next thing to watch for, I think, from Iran will be whether they follow through on the threat to withdraw from the non-proliferation treaty. That's a decades-long treaty, international treaty that has restricted the proliferation of nuclear weapons. If Iran follows through on that threat, then that's, again, only going to increase the concerns that the atomic program run out of Tehran could be weaponized.
Now, obviously, with this new line from the State Department talking about regional tensions and restricting, at least domestically, travel for government employees, I guess that means that, you know, this theatre could be very much in Israel's court as well. Will Israel respond, do you think?
Well, the main thing on the Israel front was overnight we had this report that Israel was ready to carry out an operation against Iran's nuclear sites. Again, that's a threat that they've sort of held in the air for some time. I think that report could have been written at many times over the past 10 or so years. But obviously the timing is important while the nuclear diplomacy talks are going on with the US. I think ultimately it's all just ramping up the pressure ahead of the next round of talks between Iran and the US, mediated by Oman, that are scheduled for this Sunday. with all the bluster in the past few days, staff being withdrawn, potential strikes on the horizon, that's all pointing to a particularly pivotal round of talks. I think it'll be really key to see if they can square the circle of whether or not Iran will be allowed to retain some kind of enrichment capacity in any deal with the US.
Is it possible at all, Patrick, and I know this is probably an impossible question for you to answer, but is it possible that this idea that Iran has ordered the launch of a new uranium enrichment center, that would be something that could be leveraged if necessary in any US talks? So in other words, to withdraw that order might give Iran some ammunition?
Absolutely, and I think for many people, the whole nature of the nuclear program is exactly that. Right? They've increased enrichment massively, and now that enrichment, that capability, those facilities that have been so highly developed are exactly what's on the table to be partially, fully, yet to be seen, dismantled under the terms of a deal. So yeah, exactly. It's leverage for Iran to use. The stumbling block is still that point, which is a zero-sum point of whether they can retain some capacity or if they have to give it all up. And what I think in turn they get in exchange in terms of sanctions relief. That could be partial, it could be complete. There's still a lot of variables to be negotiated.
Patrick, thank you so much. Well, off the back of that, we are actually seeing WTI and Brent down about 1.2%. So not as panicked in that market, at least, as we saw yesterday. That was Patrick Sykes for us in Istanbul. Now to other top stories trending on the terminal this morning. The UK economy shrank by 0.3% in April, month over month, more than the average economist estimate. Sharp tax increases and President Trump's tariffs triggered the biggest monthly contraction in Britain in 18 months. It all casts doubt over the Labour government's plan to bet on growth to fund its spending ambitions. Deutsche Bank's fixed income and currency traders overcame a choppy start to the second quarter and should deliver a stronger second half of the year. That's according to CEO Christian Sewing, who spoke at the Goldman Sachs investment conference. He called the first 15 days in April a rough start. That's, of course, when President Trump's tariff announcement jolted markets. Apollo is taking a leaf out of JP Morgan's book. The asset management giant told prospective investment banking candidates that it won't interview nor extend offers to the class of 2027 this year, saying it believes graduates should take time earlier in their careers to deepen their understanding of business. The letters follow backlash from banks over young recruits accepting future dated offers. Let's take a look at markets now. We are seeing S&P and Dow and Nasdaq 100 futures pointed lower in the early going. More so, in fact, for Russell 2000. This would be after a down session yesterday. And as you can see, the 10-year yield there at 440, having dropped 7 or 8 basis points yesterday. We have the 530 spread now below 90 basis points. It'll be fascinating to watch that 30-year auction later on at 1 p.m. Eastern. Now let's head to the Founders Forum, where founders and investors across Europe are gathering in Oxfordshire, England. Bloomberg Editor-in-Chief John Micklethwaite is with Netflix co-CEO Greg Peters. Let's listen in.
I would say, based on our ability to internally estimate the Mike Tyson, Jake Paul audience, which we were, about a quarter of what we actually ended up having. Maybe our estimates aren't as good as they could be, but we think it's going to be quite big, I think, and that's the most important part. And quite big globally, too, because Canelo's obviously got an amazing following in Mexico, and so we'll have some Latin American viewers as well. But to your main question, we do think about this as more of an event strategy rather than a sports strategy per se. So we want to try and do kind of big buzzy events that people are talking about, that they enjoy watching, and then reliving the stories about together. And we think that that's something we can add as value to our subscribers. But we also, and we love sports, to be clear. We would love to have Premier League and American football and many things. And we do carry the American football games on Christmas, and we're going to do World Cup coming up. But we also want to make sure that we are doing this in a profitable way, and so us being very disciplined about what events that we go after, and making sure that we are not paying too much for, let's say, a whole season, of a league. That's the kind of balance that we're seeking to strike.
So you're not going to bid on packages of UFC or Major League Baseball or even Formula One, which sometimes, occasionally you hear your name being mentioned in these moments.
Yeah, for sure. And I think, I mean, of course, everyone would love us to be a bidder. It's good to have multiple bidders coming in. And F1 we have a special relationship with because of Drive to Survive, which we love. But I would say until we find a way to do something bigger in a way that we think is sustainably profitable, that's really the crux of it. We've done it with WWE, which is an example where we did a long-term deal where we felt like, if we help grow this property, we get to benefit as well as they get to benefit. So that might be a model, but we've got to really figure out those models that we can remain disciplined around.
So you're more likely to go for a kind of newer sport, if I can put it that way.
Well, perhaps. I don't necessarily know that that's the case. I mean, certainly us finding opportunities with leagues to take particular games that we can eventize, we can do something special around it. The American football games that we did on Christmas Day, we did Beyonce with as well, which was, I think made it more of an event, more special as a result. So those are the kind of opportunities that we're definitely looking for. Things that, if we can help grow the viewership of the sport through those activities, that's good for the league as well. So that typically an opportunity to find a good deal around it. So it's just, finding those specific instances that really work in that model.
Do you think the old model of sports is dead, that it might move more? The thing you're talking about is a more kind of event, individual game almost model.
Well, I wouldn't certainly say that the old model is dead, and I think there's ample bidders for these properties that we see. But I would say we don't know a way to make it work for us in that specific way. And I think, we're enthusiastic about trying to figure that out over a period of time. But, to be very clear, we want to make sure that the properties that we bid for work for our business as well as for the league and for our members.
The idea, though, that you are the most profitable and you're not that interested in it, I think is interesting. On that subject, the other thing that happened this week is we saw Warner Brothers Discovery spinning off its cable channels. A huge thing in your industry. What's your reaction to that, and what does that tell you about the industry?
Well, I think we're going through an evolution, and we're sort of getting to the next phase of maturity where the market participants are trying to figure out, given the new reality, sort of what consumers expect from the business. Everything is moving to streaming. Everything is moving to on demand. It's very clear that consumers want that. Then they have to rationalize their business for that reality, and we're definitely seeing, the results of that. And I think these are sort of, inevitable, long predicted, long forecasted changes. So there's going to be a period of, shakeout and transition associated with that. I'd say, I feel, we were lucky, I would say, in the fact that we came into this, new ecosystem starting with the new model, so we don't actually have some of the complexities or difficulties of having to navigate through the transition because we've got a legacy business model. So that just makes it a little bit easier for us.
Do you expect to see mergers between these legacy players?
I think that's there's an inevitable logic to that, and then you get to every merger is a unique opportunity, and sometimes it presents interesting complexities. There's regulatory complexities that often are the case, and then there's, the two companies have got to decide it makes sense, for them to go do it. And there's lots of, I should note that the track record around doing these large media mergers is maybe not amazing. There's some good examples out there, but there's some not necessarily great ones. And so, I think folks want to think long and hard about whether or not they're in a position to do it well.
So Netflix would likely not be a player in buying some of these things.
I think we have an obligation to explore all of the opportunities that are in front of us. So it's our responsibility.
And then reject them.
It's our responsibility to do good due diligence, but then also to have a cold, hard, disciplined look at, do we think we could do this well? And I would just say, like our track record is we're builders, we're not buyers. And so we're not particularly great at acquiring companies. It's not like sort of a demonstrated practice or capability that we've built. So I think we should bring that, perspective into how we think about these as well.
In terms of competition, though, do you think about the other streamers as competition, or how much do you now think of YouTube as the competitor?
Well, I would say we think that we're in a massively competitive environment, right? And we've got competition from traditional media. We've got competition from new streamers, Amazon, Apple, et cetera. We've got competition from, UGC products, user-generated products like YouTube, like TikTok, sort of everything. Games is obviously a source of competition. Increasingly we see, YouTube is a pretty strong competitor for time and attention. They're doing a good job at accumulating that. And, we think our response and our job is to make sure that we're making sure that it's distinct and clear, the job that we do in the entertainment ecosystem, both for creators in terms of giving them the resources required to produce amazing stories, and a platform to give a big audience for that. And then also, obviously, then for consumers and our members, which is to give them a particular kind of storytelling that they don't see on YouTube, but also make sure that we are expanding that portfolio in the places that we think we can operate, and expanding the ease of access and the ease of being able to engage in those stories in a way that gives them an experience which is also competitive with what YouTube is offering them.
I mean, your co-CEO, Ted Sarandos, famously said, YouTube is a place where people go to kill time. Netflix is where people spend time. But there's some signs that you're slightly reconsidering that YouTube does seem to be a place which is beginning to compete with you slightly more directly.
Yeah, I think they're trying to move up, frankly, and our job is to defend that space. And so how do we think about that? One of the ways we do that is we think that YouTube is a place where, great storytellers can emerge, and great storytellers that are doing the kind of storytelling that we think that we're good at. And our job should be to say, hey, we think Netflix is a great place for you to go and tell those kind of stories in a different way that our model supports that they might not be able to do on a YouTube, let's say. So that's an example of a place to be competitive. We're also trying to be competitive and trying to think about an evolution of our member experience in ways that there's a broader range of content that we can offer that still feels like Netflix content, what you'd expect to get from us, but also in ways that just make it easier to get into that space. Because I think one of the things that we see is sometimes there's immense value put on getting into a deeply engaging story, and that has a tremendous amount of payoff, and you can see that in the economics or in our business model. Folks are willing to pay for that. But also sometimes that can seem like a hurdle to get into, right? And so, we want to broaden that space and make it a little bit easier every year.
On the 7 streaming services at the moment, do you expect that number to come down? If we met each other in 3-4 years, would you expect that to be down to fewer?
I generally look at the way the internet works, and it tends to sort into sort of 2 buckets, right? Which is, there's a lot of benefits on scale, and so that would argue that number probably should be smaller. There's also, a space that exists where very targeted, very, niche services can operate at great, lower cost, but, sort of can be quite effective as well. So my guess is that's where we land.
One of the joys of your life at the moment, which you probably didn't anticipate before, is things like tariffs. We have Donald Trump coming to you and now saying he wants to put 100% tariffs on foreign production coming to the US. You make a lot of stuff around the world, and I suspect you would be more affected than most. What's your strategy on that?
Well, we're sort of waiting for a specific proposal. We haven't actually seen any details yet, so it's hard to respond specifically in absence of those details. So we're in sort of standby mode, and as soon as we see something, then we can comment more fully.
Do you worry about entertainment getting wrapped up in much bigger quarrels with China, all those sort of things?
Well, I think that entertainment is a universal product in the sense that all humans want to be told stories. So I definitely see that as a strong reason for optimistic perspective on the industry. And then we've always had to, I think about storytelling as also having a highly local component, right? Which is, there's very different cultural perspectives and perspectives of storytellers. And mostly our job is to try and give storytellers around the world in multiple different places, multiple different languages, the opportunity to tell their stories. And that wealth and diversity of perspective has served us quite well. So I think that's how we think about it.
So you would still continue with it pretty much regardless, but because you need that local content for other places in the world.
That's right. I mean, local consumers want to hear authentic stories from the place and culture that they exist in, and then sometimes those stories become large global phenomena as well. And we definitely think that you have to start local and tell that authentic story, and then if you do that really, really well, sometimes that's the thing that goes global.
What happens in terms of AI? There's been a lot of fuss about how maybe AI can change the way that films and TV is produced. What would you expect to change most over the next couple of years?
Well, I would say one, there's a long gap between what you can see in a demo and sort of what you get to when you actually have to put something in production and really, have predictable outputs. So we're definitely in that space where there's a lot of work that goes on. But we're seeing tools, especially tools that help creators in the sort of non-production part of the process. So this is pre-visualization, or shot composition, things that work in that regard. But I think that gets to really our perspective on what AI will do, which is it'll give an increasingly effective set of tools that still, has the creator at the center. Because we very much believe that storytelling it's a hard thing to go do. It's a unevenly and rare commodity in the distribution of humans in the planet. And great storytellers, will still be at the center of, creating great stories.
When you look at the value in Netflix, where is it? Is it that subscriber base? Is it the IP? What is the bit that you most want to defend?
Well, I would say we're trying to build more and more value in the IP that we have. We're relatively young in that regard, right? So if you look at our traditional media peers, they have much
enormous libraries,
and sort of much more valuable, let's say, IP catalog. But then, I think, if you look at our track record, we've only been doing this, for a little bit over a decade, right? And we've, got some properties that we're quite excited. If you think about Stranger Things as an example, we've got, season 2 of Wednesday coming out. I think these are all examples of, us building IP. But, largely what I'd say is that we've got over 500 million people on the planet who come to us to seek to be entertained. And our job is to fulfill that, and if we do a good job, that's quite a valuable business.
There's been a slight shift, though, in the kind of business model away. It was all about growing subscribers, and that's what everyone always focused on every quarter. Now there's a little bit more about profits, returns, and one obvious way in which you could become even more profitable is to put up prices. So I wonder to what extent could that be part of the strategy going forward?
Yeah, and we've long had the perspective that it was smart in the business to sort of always grow margin a little bit, every year, because that was sort of building in that discipline about just how we wanted to build a more successful business was important. So we've been doing that for quite some time. And then, we've got a couple different levers to go do that. Obviously, growing subscribers is one of those. We continue to go do that. Being able to raise prices because we've delivered more value to those subscribers, and we think that it's appropriate to go back and ask them to pay a little bit more so that we can reinvest into actually improving the value of the service is another one. But we've also got increasingly other ones too. We've got advertising we've added to the mix as well, and so now we have the opportunity to work with amazing brands around the world and give them the capability to tell the story about the products and services that they are delivering to consumers on the planet that are interested, because we're targeting increasingly and getting better at personalizing those ad experiences. So I'd say, we're just, as many businesses do, we're getting increasingly sophisticated and having more of those levers at hand to try and continue to do what we do, which is build a better and better business every year.
How much pricing power, though, do you think you have? Do you have the pricing power conceivably to double fees? Just to give you an example, it's much easier to double the subscription fee than to double the number of subscribers.
Well, it depends on what country we're talking about, actually, I would say. And so we think about that answer as very different around different countries around the world. And to be clear, we believe that there's there's hundreds of millions of Netflix capable households that have everything that they need to sign up that aren't currently signed up yet. So we've got a lot of work to go do there as well. But we don't have an a priori position on this, and we really think about this as an interaction with consumers, with our members, where we look for signals that we've delivered more value and it's an appropriate time to ask them to pay a bit more. That's the thing that governs how we actually think about changing prices.
And in terms of the other way of growing business, which you said is to get those subscribers, is that now something that is moving much more to Asia, say, than Europe? I think Europe is your biggest market at the moment.
I'd say one we
put it together.
Yeah, we put it together. We believe there's a subscriber growth pretty much in every country that we operate in. So it's not as if we feel like we're done growing anywhere at this point in time. But to your point, if we look at the sort of the open opportunity, the TAM available to us, there's a lot in Asia. We're just younger in Asia. We've got more work to go do to improve the offering there. We think about. Oftentimes in countries, you start at a center in terms of the content and the offering and how it's presented to market, and then you start to expand out. And there's many countries that we've got a lot more room to grow in Asia.
And just be a little bit more specific on that. Are there particular countries in Asia that you're targeting? Is it across the whole region?
Well, there's tons of opportunity there. So, I would say we first launched in Japan. That's probably the furthest along in that sort of evolution.
Where you were based for
I had the great honor to launch the service there and get us rolling. Korea, is another great example. I think we're making good progress. India, we've seen good acceleration in subscriber growth there as we get more.
Can you charge the same kind of fees in India that you can elsewhere? Subscription normally there is much cheaper.
Yeah, and we do think of pricing as a very local, country-specific situation. So we charge different fees there, and to your point, they're lower in India as well. But I would say there's tons of growth all throughout Asia, and there's tons more work for us to go do.
Is that a really big difference between you and the other streaming services? Is that you do tend to be more global? Amazon maybe as well. Apple's a bit patchy. You've got these other people are behind you. Certainly the standard old Hollywood ones.
Well, I would say in terms of that set, we're the most global, and there's part of being global is being available for consumers around the world, but also being available. There's a deep set of what does that mean? Are you good at payments in the market? Do you have many local partners? Our partnerships and all these markets run incredibly deep, and which is important to making sure that the service is available, accessible to members. But a big part of also being global is the content offering, right? And so we produce in more than 50 countries around the world productions, and so that's critical to making sure that we've got the right kind of stories that those local members want to hear.
One last thing, just if you look at your standard Netflix screen, we're all very used to it.
Yep.
Is that going to change at all?
Well, we did just actually roll out a pretty significant change to it, where we've been working on this for a while, where we've had the same essentially UI structure, user interface structure, for almost 10 years, and now we've just come up with a new one, which we think will set up the business for the next 10 years worth of innovation. It supports new content types effectively. So we mentioned all the live things that we're doing, like that Canelo Crawford fight. It'll do a better job at letting people know that this fight's coming, and then they can remember and be able to watch it in time. Games is another interesting space for us, where we'll actually be able to deliver more games to the TV. So that's an exciting. And then there's just tons of look and feel improvements, and also one of the main benefits is that this new user interface will be able to respond dynamically to what you want in the moment, right? So we definitely see that not only do we personalize as we do today, so your Netflix looks different than my Netflix, but you probably have different needs from Netflix in the moment, right? So whether that's Sunday afternoon, maybe with the family around the TV, versus Thursday night by yourself, those, we want to make sure that the UI is doing that specific job very, very well.
So we're going to end up with a more kind of personalized Netflix. Could it be the place where actually the thing we've always looked for on the news side is to try and personalize news? People have tried and failed. Do you think entertainment is the place where we might see that first?
Well, I would say we're already highly personalized, right? So the title selection that you and I get,
what you've been watching and so on,
that'll be very different for you and I. We actually present titles differently in a personalized way. So even if we get maybe the same story, let's say Black Doves, incredible story, you might have a connection to that story that might be different than mine. So the assets that we use to present that should be personalized and specific in that way. But then this next step with the new user interface is that we actually want the form and function of the UI to be personalized as well, so that it is tailored and optimized to doing the job that you need in your particular moment, versus a different moment that you show up, or versus what I need in any other moment.
Great. Peter, thank you very much. We could spend a long time discussing how Black Doves would be different for both of us, but thank you.
Thank you.
Thank you. We'll have you back.
That was Netflix co-CEO Greg Peters with Bloomberg editor-in-chief John Micklethwaite at the Founders Forum in England. And you can continue to follow our Founders Forum panels by typing Live Go on your terminals. It's just after 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn in for Danny Berger with your Bloomberg Brief. Here's what you need to know. Tariff warning. President Trump plans to send letters to trading partners setting unilateral levies ahead of the July 9th deadline. Mideast tensions. The Pentagon orders some staff to pull out of their embassy in Baghdad after Iran threatened to strike U.S. air bases. And markets keeping a close eye on the 30-year Treasury auction as concerns mount over U.S. deficits and President Trump's tax bill. Let's take a look at where we stand markets-wise now. We are taking another leg lower, this partially on Boeing, which is down more than 7%. But as you can see, S&P futures pointed to a drop of 0.4% at the open after a down day yesterday. That index was down about 0.25%. The Nasdaq 100 showing a drop of about 0.3 at the open on those futures. And the Russell 2000, perhaps on these tariff letters going out in the next 1 to 2 weeks, maybe affecting small to medium-sized businesses more, down 0.75% in the early going in terms of futures. Take a quick look at the bond markets, because we did see a big rally yesterday, and that's being reflected in yields. The 2-year yield there is sensitive to interest rate moves. Now the market pricing in about 47 basis points of cuts before the end of the year at 392.86, and that all crucial 30-year yield down almost 10 basis points from a couple of weeks ago, and down several basis points after yesterday's successful auction. We'll see how traders feel those 30 years are valued later on today at 1 o'clock when we look at that auction. Back to breaking news now. Boeing is down 7% in early going. An Air India Boeing 787 aircraft carrying 242 passengers and crew has crashed, according to the ANI news agency. The plane was travelling from Ahmedabad in Gujarat to London Gatwick. For more, we're joined by Bloomberg's global aviation correspondent, Sid Phillip. Sid, give us the latest. What do we know about how this plane crashed, when it crashed, and so on?
Morning, Bonnie. So we don't really know yet about how this plane crashed or what really went wrong with this crash. But I mean, essentially, it was a catastrophic incident for the airline. And essentially, we're trying to see in the next coming days, we'll sort of have more insight into what really went wrong with the aircraft. It was a Boeing 787 jet. It was 12 years old and was operated by Air India. It had sort of flown a flight from New Delhi to Ahmedabad earlier in the day and was sort of on its takeoff. It was taking off for London when the crash occurred. And so it was just minutes after taking off that we had the crash. It was about 625 feet off the ground, and it was sort of at takeoff speed. So we're trying to figure out what the details are of this incident. We're trying to figure out what really went wrong, but it is a catastrophic incident for the airline, and it is sort of, we'll have to see if there was anything that went wrong with the aircraft or whether it was a technical error or pilot error. We still don't know the details, but it is a significant crisis for the carrier.
And it literally just happened. Rescue operations obviously just underway. We're hearing from a spokesperson for the airport that airport, Ahmedabad airport, is obviously closed. Just give us some context, Sid. Air India is obviously the flag carrier airline for India, one of the largest fleet sizes. It travels in and out of airports all across India and Gujarat region all day long, every day, right? And tell us a little bit more about the 787 Dreamliner. As I understand it, this would be the first incident for that particular aircraft.
Yes, this would be. So this is, I mean, the 787 Dreamliner is a very advanced aircraft. It's the first ever fatal crash for the aircraft. And so this would be a very significant sort of, it would be a very significant moment for the model, which has so far had an unblemished safety record. And we're looking to see what really went wrong. I mean, Air India obviously is in the midst of a revitalization of its fleet after it's been taken over by India's Tata Group. It was state-owned, and now it's owned by the Tata Group, and they're in the midst of expanding its fleet. They've placed large orders. At the last Paris Air Show, they announced orders for 430 aircraft, and so they are in a growth mode. They are flying to more destinations, both within India and around the world, and we're really looking to see what this impact means for the carrier and their growth plans as well, I mean, longer term.
Absolutely, and our thoughts, of course, are with everybody involved inside the aircraft and outside as well. Sid Phillip, thank you so much. That is our airline expert, Sid Phillip, and we'll keep you updated as we learn more throughout the morning. A quick check of the markets now. We're seeing futures pointed to a lower open in a few hours, about 0.4% per index. That's after a down day yesterday, but 3 up days previously. You can see the 10-year yield there at 4.39. We are looking at a spread, a 5.30 spread below 90 basis points, about 89 basis points. And that bodes potentially well for the auction later on, the 30-year auction. All eyes will be on that auction. So joining us now to talk us through some of these market moves is Wu Silverman, Head of Derivative Strategy at RBC Capital Markets. Amy, talk to us about the character of this market at the moment. We have a VIX at around 18, a move index that's pretty, I don't want to say complacent. That might be adding too much motivation to this market, but is it a complacent market?
Certainly feels that way. And then I think when you get this Trump tweet risk that comes and goes, it certainly feels like a volatility pothole. Vonnie, I think one thing that is interesting about the options market and what it's saying is short term, we've certainly seen the VIX come down. It's kind of below that psychological 20 handle. But when you look longer term, when you look 3 months out, 6 months out, you still see a decent amount of elevation in implied volatility. This is on S&P, this is on IWM, which is the small cap proxy. And it is telling you that people are worried. I think they just don't know how to play the timing right now because there's been a lot of can kicking, especially as it relates to tariffs.
I love how you characterize them as volatility potholes. And I'm curious, Amy, where do you see the spikes more? Is it when President Trump tweets out something random that we haven't been anticipating? Or is it when we hear something about Iran potentially ordering a new nuclear enrichment site, a geopolitical headline? Or is it something, even as maybe not central to domestic affairs as a rift between Elon Musk and Donald Trump?
Yeah, you would think rationally that something that's a major geopolitical tension, like a potential nuclear armament, would cause the volatility spikes. It's actually the latter. It's, the breakdown of a bromance. It's, whether or not Trump will not taco out because people have calling him a chicken. And so, it feels kind of silly, but there are quite serious consequences. And, I have to tell my bad volatility joke, which is, there's this other Greek that people aren't considering, and it's tweeta risk. It's the risk of Trump's tweets affecting implied volatility. We've seen that time and time again. And I think it's just related to the unpredictability that you have when you have one person who is so determinative for policy rather than something that's more tectonic like geopolitical risk, but also might move more slowly.
That is fascinating, Amy, what you just said, and takes me completely by surprise. I'm curious, what is the picture around July 9th? If you look at sort of the term structure and volatility out that far, is there anything surrounding July 9th, or is the market assuming that we'll have more answers by then?
Yeah, so if you had asked me this question a few days ago, I would have said the market is essentially believing that either this framework will get pushed out or we'll get some deal that generally the market's relatively happy with. That has been changing a little, and this is what I mean by Trump just continues to keep investors on their toes. And you're starting to see that change, that little bit of spike. But again, it's early days. I think, again, it depends on whether or not we get more of that tweet bomb risk. But anecdotally, when I talk to investors, what they say is they do believe there are guardrails in place. It might not necessarily be on the S&P in terms of the equity markets, but perhaps the Trump put is on the bond market. He does watch the markets really closely. And also Scott Bessent has said that we've seen the last VIX spike during Liberation Day. That's the highest it should go. It's always interesting to me when people in the administration are calling for the peak in VIX, and who knows, but they're certainly watching the market.
How much more expensive is it to buy volatility protection, and where are people looking for it?
So what I would say is, look, if you had asked me this question versus a few years ago, of course things do look relatively more expensive. But in the context we're in, which is the US is trying to make this kind of generational change in tariff policy, if you go back to April 2nd when this all started, it's gotten a lot less expensive. So if you look on a 5-year basis at both tail risk and skew risk, so the risk of a 10% drawdown in the market, we're essentially in its 40th percentile, so below average on a 5-year percentile basis. And that's come down from basically the 99th percentile when you think about the week after April 2nd.
Amy, give us an update on the retail trader and those volatility spikes that we see at certain times of the day that may even be, or are very likely, bots to a large degree. Should we expect more of that? Is it troubling? Is it a concern that the rest of us should have?
Look, I think you can call it bots, you can call it systematic trading, but I think that is just becoming more and more of what is normal, especially in derivatives markets and equity markets. I will tell you in terms of a retail update, they won round one, right? They were steadily buying the dip when investors degrossed and de-risked, and they ended up being right. They did not get whipsawed. And some of that has to do with the fact that retail investors probably just have a longer time horizon. They're not trying to meet some equity equity benchmark for year end. Perhaps they have a 30-year time horizon. I think that's part of the difference. But, the retail investor who has been buying since April 2nd is still happy. And, look, you have markets near all-time highs, and that certainly for them is something to not complain about.
For sure. Amy, thank you so much for your time this morning. Much appreciated. That is Amy Wu Silverman of RBC Capital Markets. Coming up, mapping out the tariff agenda, President Trump reiterates his planned proposal for trading partners in the US. More on that story next. This is Bloomberg.
We're going to be sending letters out in about a week and a half, 2 weeks, to countries telling them what the deal is, like I did with EU.
President Trump reiterating his plan for the trading partners ahead of the US deadline of July 9th as it looms. Joining us now is Bloomberg's Brendan Murray. Do these trading partners have any idea what to expect? Brendan, will it be a different offer, if you like, for each one?
Well, they do know what their tariff rate would be if they don't strike one of these deals by July 9th. And some of them are very high. Vietnam's is 46%. Japan and Korea are looking at something in the neighborhood of 25%. So those would be economically painful for those economies, particularly the Japanese and the Korean auto industries. Vietnam, based on our reporting, is in the fast lane for a deal. It's making noises that the Trump administration likes to hear about buying more U.S. exports. India is also among the countries that is moving quickly. So we have 3 or 4 weeks now before these deals need to come together, and you have the president saying, on one hand, if you don't have one with us, then you're going to get that higher reciprocal tariff rate. And then you have Treasury Secretary Bessent saying, kind of softening the tone and saying, well, if you're negotiating in good faith with us, then we'll push that deadline out and keep talking. So that's probably by design to encourage countries that think that they can delay and stall and wait this out to come to the negotiating table quickly.
Certainly seems so. Brendan, thank you so much for joining us this morning. We appreciate it. That is Bloomberg's Brendan Murray. Meanwhile, in the Middle East, geopolitical tensions are rising, causing oil to fall today, though, after a 4% jump yesterday. Iran has threatened to strike U.S. bases in the region if talks over its nuclear program fall through. Joining us now is Bloomberg's Will Kennedy. And Will, we're getting even more headlines today from the semi-official Noor agency that Iran has ordered the production of a new uranium enrichment facility. Does this up the temperature even more?
It does. I think that traders in the oil market are tracking a few different risks here, Bonnie. Number one, clearly there is this threat in the background of military action, this talk that Israel may be willing to strike Iran, and that's obviously the worst case scenario for many oil traders if it escalated and stopped oil flowing from the Persian Gulf, which obviously is key to the global oil market. But in the background, you've got this atomic diplomacy and the talks between the US and Iran on a nuclear deal. And there the mood music is very, very bad. Today you've got the IAEA, the UN Atomic Agency, saying that Iran is in breach of its obligations on uranium enrichment, and in turn Iran saying, as you pointed out, that it may up its uranium enrichment. And against that background, the risk for the oil market is also that sanctions will snap back on Iran, that the US will press for more sanctions, that the UN process will snap back previous sanctions, and that will also restrict the flow of oil out of Iran. And that's why we're seeing prices rise yesterday by a significant amount. And I think one thing I would point out is that prices touched $70 a barrel yesterday, which is not a level for the key Brent benchmark that we've seen since April, when OPEC started putting a lot of oil back into the market. And I think that shows you just how resilient the oil market has been to all this extra Saudi and OPEC supply, and the concerns that we may be losing oil from Iran in the coming months.
Yeah, it was quite the eye-popping move yesterday. We'll certainly keep our eye on all the headlines and the market moves today as well. Bloomberg's Will Kennedy, thank you so much for joining. All eyes also on the 30-year Treasury auction scheduled for 1 p.m. New York time. Investors are looking for a fresh read on whether spiralling deficits are actually sounding alarms in the bond market. Veteran bond manager Jeffrey Gunlock of Double Line Capital told Bloomberg a reckoning is coming for America's debt burden.
There's an awareness now that The long-term Treasury bond is not a legitimate flight to quality asset. It's not responding to lower interest rates. It's not really responding to an inflation rate, which is now 2.5%, probably going to go higher on the inflation rate.
For more on what to expect, Bloomberg's Alina Oyemada, who leads our European FX and rates coverage, joins me now. So, Alina, bond auctions have become much-watched events for Wall Street. What's the feeling going into this one, given that it was pretty successful yesterday and the 30-year might be a little richer today?
Yes, that's right. The auctions have been very much in focus, and this one in particular is important because it's an offering of 30-year bonds. If you remember well, last month we had a huge sell-off on long-term bonds, and those 30-year tenor ones were at the heart of it, not only in the US, but also in Japan. What's behind this whole anxiety is really fiscal concerns. So investors are worried that governments are spending more and will have to issue more debt to fund that spending, and that's making the market a bit jittery. Like you said, yesterday's auction went fine. So today we are really looking for any signs on whether investors will still buy into it or if there's some cold feet going into it.
All right, Alina, that's at 1 p.m. again, Eastern Time, and we'll be keeping our eye on those yields. That's Alina Oyemada. Thank you so much. Back to breaking news. An Air India Boeing 787 aircraft carrying 242 passengers and crew has crashed. This according to the ANI news agency. The plane was travelling from Ahmedabad to London Gatwick Airport. For more, we're joined by Bloomberg's global aviation correspondent, Sid Phillips. Sid, what can you tell us about the crash?
So the airline just confirmed that 242 passengers and crew on board the aircraft, and they did confirm that they haven't yet said how many have survived or what the casualty numbers are, but we did see images of a fairly fiery explosion for the aircraft. And we do know that the aircraft was a Boeing 787 aircraft. If this would be the first ever fatal crash for the aircraft. I mean, this aircraft has been in service for over a decade now, and it's used by multiple airlines. It's Boeing's most technologically advanced aircraft that's currently in service. And this would be the first fatal crash for that model. We're still waiting to see what the airline or the authorities talk about in terms of what the reason for the crash was. I mean, I think we'll know more about it as the days and months go by. But at the moment, we don't really have a cause for what happened. We do know that the aircraft climbed to about 625 feet. So shortly after takeoff, this accident occurred, and we're still waiting on more details for what really went down.
And give us some context, Sid. Ahmedabad is in Gujarat region, and Air India would be the flag carrier airline, right?
Yeah, so Air India is in India's flag carrier airline. They operate international services to the US, the UK, and other destinations around the world. They're in the midst of a turnaround under the Tata Group. I mean, Tata Group acquired Air India from the government of India, and they've placed large orders for 500 plus aircraft. They're revitalizing their fleet, they're revitalizing their services, they're adding more destinations. And so this is a massive blow to the carrier, which had sort of ambitions to scale up and target more passengers, bring in more passengers through their hubs in New Delhi and Mumbai. And so we are still, I mean, this would be a massive blow to Air India's growth plans as well as to their safety record. But I mean, at the same time, we still don't know what really went wrong and why this crash occurred. And we're still sort of waiting for more from the government and more from the authorities in terms of what the details of this incident are.
All right, Sid, thank you. And we're just getting another headline now that it had 169 Indian and 53 British nationals on board. That's Sid Phillip in London. A check now on the markets as we head ever more closely to the opening bell. We're down about almost 0.5% for S&P futures. That after a down day yesterday. It was 0.25% of a drop for the S&P. The dollar index down another 0.5%. That is just the theme. Dollar selling constantly. The 10-year yield at 438.28 after yesterday's pretty successful auction. We'll be watching the 30-year auction at 1 p.m. Eastern. Well, that's it for Bloomberg Brief. Do stay tuned. Surveillance is right ahead. Thanks for watching. This is Bloomberg.